super bullish moves. Now, another thing that I want to point out is since 2011 or since 2012, there's a cup and handle that we have broken on the quarterly. The cup and handle there has been broken, but that makes the handle of a giant cup and handle that I was the first one to point out a couple of years ago in one of the videos. And that giant cup and handle is predicting a move that should take us well above $150, but probably around $300, $500. I mean, it sounds crazy, but $300, $500 silver is where that giant cup and handle is predicting prices that are more in line with that, maybe even higher. So that is really exciting.
As global AI infrastructure spending is projected to surpass $1.8 trillion by 2030, silver demand is moving vertically. From cloud computing and high-speed processors to hyperscale data centers, silver usage is poised to skyrocket. Analysts at GSC Commodity Intelligence believe this is the moment silver bulls have been waiting for. Silver has officially entered definitive breakout mode. The $50 level may arrive much sooner than anyone expects, and this time, we may not stop there. Renowned monetary historian Mike Maloney highlights silver's strongest 6-month and quarterly closes ever, signaling a major breakout. Based on the current setup, he forecasts silver could reach up to $500. If demand keeps exceeding supply, inventories could reach critically low levels, and it follows that silver prices would have to adjust sharply upward to ration demand. Some industry leaders believe the market might require triple-digit silver to restore equilibrium. Triple-digit as in over $100 per ounce, a nearly threefold increase from current prices. While reflecting on the market, Maloney acknowledges the seriousness of the U.S. debt crisis, but is skeptical about traditional hyperinflation due to the dollar's global reserve status. He underscores how easily trillions can be created, noting it's just 12 zeros. After years of dollar strength and commodity weakness, market participants are reassessing currency valuations in light of unsustainable debt levels across major economies. This reconsideration extends beyond the US dollar to other reserve currencies facing similar fiscal challenges. Looking at the bigger picture, Maloney argues that silver is poised for a sharp upward move due to deep structural imbalances. Referencing his book, he shows that silver would need to reach $468 to match its 1980 purchasing power against real assets. Compared to the Wilshire 5000, it would be over $2,000. Based on money supply metrics, it could exceed $900 an ounce. Before we dive into Mike Maloney's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Well, there's one thing that I want to say about that is I agree with everything that he's saying. Hyperinflation, I don't know about that because it's the world's reserve currency and there's sort of the law of big numbers. And although we have seen the Fed already hyperinflate bank reserves, that truly did get hyperinflated. We went from less than $1 billion to I can't remember what the peak was, but so I don't know about. I believe a vertical move is coming, and Congress does keep spending, and the Fed will keep typing. They don't actually print that much. They type currency into existence. And the difference between 1 and $1 trillion is just 12 zeros. So,
I love that.
However, I think Locutus should go watch part of this video again because he says silver would need to hit near $200. Well, $200 was the CPI. There's a whole section on the inflation. And the problem with the CPI is it cherry picks a few different items in society. It's not measuring everything. And true inflation is the whole economy. What does everything cost in society if you could add it all up? The thing is, the stock market's inflated the most. If you look at the Wilshire 5000 index that I showed there, I showed the inflation of everything. And basically, if silver had kept up with real estate, it would have been $468 or GDP, $468 if it went into the same type of bubble and had the same purchasing power of real estate. If silver had the same purchasing power against real estate, it would have been 468, and that's the level that it had in 1980 in today's dollars. And so this near $200 level is half that. And if you're talking about the Wilshire 5000 index, the $200 level is less than 90%. It's more than 90% less than the purchasing power that it had in 1980. Let me see. I think I was looking at that. Okay. So to have the same purchasing power as 1980, the Consumer Price Index said $200 back in the summer of 22 when the book was published. But $468 for a single family median price home, $2,178 for the Wilshire 5000 stock market index, $1,059 to purchase treasury bonds with the same percentage return. US GDP 468, currency in circulation, it should be going $971 an ounce, M2, MZM. So I measured it against all these things. But in order to buy a house, its purchasing power would have to be to have the same purchasing power as 1980. It would have to be $468. So that's measured against a house. So saying near 200, well, I guess 468 is sort of near 200 if you're saying that it could go to 1,000, or it could go vertical, looking down from a really high point like that. Yeah, near $200, 468 is. But I think that we're headed for over $200 because it isn't going to be near, like coming up from where we're at, sort of approaching $200. That is, we've already done those calculations, and that's looking in the rearview mirror. So yeah, so what else did you have to say about? I think everything in his comment is absolutely spot on, except go back and watch that piece where I go through one of the pages in the book, The Great Gold and Silver Rush of the 21st Century. And you can see that on a 6-month or the quarterly, yeah, he did the 6-month. I don't know how he did it, but on a quarterly, this is the highest close in history on a quarterly. Exactly. Yeah. And so super, super bullish moves. Now, another thing that I want to point out is since 2011 or since 2012, there's a cup and handle that we have broken on the quarterly. The cup and handle there has been broken. But that makes the handle of a giant cup and handle that I was the first one to point out a couple of years ago. And that giant cup and handle is predicting a move that should take us well above $150, but probably around $300, $500. I mean, it sounds crazy, but $300, $500 silver is where that giant cup and handle is predicting prices that are more in line with that, maybe even higher. So that is really exciting when you put this in that perspective that I had not looked at how the cup and handle for the giant cup and handle formation is playing out. But this is sort of a confirmation. We've already completed on a quarterly basis. We've completed the cup and handle. It's done.
In the interview, Mike Maloney notes that silver has been a top-performing asset class yet remains overlooked by most people. He has held gold and silver for over 2 decades, steadily accumulating. He believes a massive price move, like the 772% spike in 1979 and 1980, could happen again. Most of that historic surge occurred in just the final 60 to 90 days. The potential for price overshooting beyond fundamentals exists in silver due to its smaller market size, approximately 1/10 of gold, and concentrated industrial demand patterns. Historical precedent suggests silver typically outperforms gold in the later stages of precious metals bull markets. Silver has told a quieter story. Though it trades higher in 2025, its rise equals barely half of gold's gain. At a price in the mid-$20 per ounce, silver remains far below its 2011 peak, near $50. This disparity is reflected in the gold-to-silver ratio, which measures the number of ounces of silver required to equal the value of 1 ounce of gold. Regarding monetary crises, Maloney asserts that industrial metals suffer during downturns, while gold performs strongly, as it did even during the Great Depression. Let's get back to the interview.
Silver, precious metals just haven't been on the average person's radar for some reason, even though they're the best performing asset class other than cryptos of this century. It should be something that everybody has been holding for 20 years like I have, more than 20 years, 23 years for gold, 22 years for silver. It's paid up. For me, it's done really well. I just accumulate and accumulate and accumulate, and I don't sell off. I did sell a couple of odds and ends that I had, but I replaced them with just ounces of bullion because I had storage accounts and I was paying minimums on these little trinkets, basically, where I only had a few of this and a few of that at Brinks, and I didn't want to be paying those excess storage fees. So I sold them, but I replaced the ounces with what I already had, bars and silver eagles. Now, one of the things that I want to point out for people is this is all of 79 and 3 weeks. However, in 79, that 425% move or whatever it is there, most of that happened in the last month of it. So from like 100 to 400, or maybe it was 200 to 400, most of that gray bar happened in December, maybe November, December. But really, silver waited until like the very end and then just suddenly exploded. And so really, of this 772%, 772 for the intraday high, probably 500% of that, possibly even more, came in just like 60, somewhere between 40 and 60 days. Maybe 90 days at the most. But it was just, I'd have to look at a chart and see the data in front of me. But it's, everybody here should look at it. Go on stock charts and look at stuff back in the 70s. I like to look at what copper is doing. I don't really care about platinum and palladium. They have never been money. They aren't money now, and they will never be money. And so when there's a crisis, people are not going to be rushing toward palladium. They're going to be dumping that for gold and silver. Gold and silver will go to the moon. And when the economy is bad, people don't need the base metals. They aren't building as many houses. So timber and cement and iron, all of these things do not do as well during bad economic times. But even during the Great Depression, gold did really well.
Silver's technical picture reveals a powerful move above key moving averages, accompanied by accelerating momentum. Silver has been climbing the proverbial wall of worry largely alone. If the crowd joins, the move could turn parabolic. With silver showing all the signs of a historic breakout, are you positioned before the next explosive move begins, or after it's already too late? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.